All right, I want to welcome everyone, especially today for a special review session. And we will be reviewing our weekly analysis for this past week. We'll be looking at certain decisions we made in the markets, how we made our entries, what our analysis was like, our winning rates, our losing rates, and we'll be able to analyze our profitability. This is so we can be able to, if there's need for re-strategizing, we'll be able to re-strategize for better week ahead. So quickly, I'm going to share my screen. I'm going to share my trading view. Of course, my screen is already shared, and purposely did not clean most of my lines in my charts, and this is because of this review session. We need to be able to use these drawings and lines to look at certain decisions we made in the market during the week, the reason we made the decisions, and the outcome of the decisions. We want to be profitable as traders, and one of the reasons why we can be profitable is when we are able to have a working strategy that works always. But in Forex trading, there's never any strategy that works forever. Rather, in every strategy that you use, you have to keep on checking the winning rates. You have to keep on reviewing the winning rate, and that's how you can be able to know if your strategy is still very much valid for what you're doing. Right, so we're on the 1 week time frame, and those of us who have been following all our process in analyzing the market, you always know that we start our analysis from the 1 week time frame, where we take price actions. We take our price actions at different price actions level. We take these, and someone might be wondering, why do you call that price action levels? We call it price action levels on higher time frames because these candles don't just react. They don't just, like this one did not just call me and just get rejected. We are day traders and we take entries from lower time frame. So this huge rejection in these higher time frames, when we mark them like this, in the lower time frames, they give us opportunity to find an entrance into the market. So that's why we call them price action levels. And also we look at the trend. Trends also help us to make decision. If you look very well, you see that this particular currency pair, GU, has been on a constant downtrend for a very long time now. Even though this counter trend was building and we drew a counter trend line in that direction, just in case for any reason price begins to build on that line, we know that, okay, we are on a little uptrend. But that has not yet happened, because if you look well, you see that we also drew another line on this little trend, so that if price breaks it, we know, okay, we should be expecting a move on this trend. What happened, if you can look very well in the course of the week, is price got to the trend line, this one that we drew, and got rejected, showing us and indicating that we are still on a downtrend. And for those of you that followed my analysis at the beginning of the week, I was explaining that I think I did that from the 24 hours time frame. Okay, so we're done with the 1 week. We go straight to 24-hour. So it was on the 24-hour time frame. I was trying to tell us that I have looked at the previous character of GU in this manner. And I observed that this uptrend that is gone, I observed that this was where price was somewhere around this side at the beginning of the week. I said I observed that once this price, if this price begins to go up, it will get rejected at this point. And that's why, if you notice, we took note of that resistance and we wrote resistance from 24 hours time frame. Of course, it was a support here. Is that okay? It's a support here. But in previous times, that same support zone has been used as a resistance. If you look, you will see that it was used as a resistance here. You scroll backward again, you see in previous time that it was tested. So it was used as a resistance. That's why it can be called a resistance. So it was a support that was tested as a resistance and also as a support. So it's a resistance support zone. So, and it's coming from the 24 hours time frame. So it's a very key zone. So I was telling us at the beginning of the week that if for any reason price gets to that level, it might get rejected and give a down movement. And if it doesn't get rejected, we're going to be looking out for the breaking. So, and exactly how we analyze it was how it occurred. First of all, price broke through the resistance level, making most sellers to think that it was not going to go down. And that brought about some wrong decisions for some of our retail traders. And then all of a sudden, price would go to our psychological level. See why you don't need to joke with psychological level. After breaking the 24 hours 20 resistance and side, it went to touch the psychological level before it gave the rejection. I'm going to be saying something about that when we start talking about entries. And that brings me to some of the courses I've been doing on ICT and smart money. There is something we call liquidity in the markets. You must be able to spot liquidity before you make entries now. That will help you win more trades. In this place, there is liquidity here. So that means we can say there is money here. So that's why the sellers were able to move the market downward. So knowing that there is a huge resistance there, you will notice that a lot of sellers enter that market, and that's where smart money comes in. So if sellers came into the market at this level, the resistance level, and the market still went ahead to go directly to the psychological level, that's to tell you that some of these sellers might put, if you look at these blue lines are my resistance from 4 hours time frame. I actually labeled them. I'm wondering why they are not showing. So the resistance level for the 4 hours time frame, if you look at them very well, you notice that it was just after the 24 hours. There's some people that might put there as their stop loss. But you see, smart money would take out those stop losses. He has to take out those stop losses before the market begins to go down. And that's why many people will say, I don't know, I took this trade and suddenly the candle just came, took out my stop loss, and then went in my direction. Of course, this was your direction, but it has hit your stop loss. So we're going to be paying attention to smart money concepts in our entry level. I'm going to be telling you some of the smart attentions that you must pay so that you do not experience markets coming to hit your stop loss before going in your direction. One of the smart move here is knowing that there is a resistance level here at the 4 hour time frame. You should know that a lot of people will be coming into the market at that level. Then knowing that there is a psychological level here, you should know that a lot of people will be coming to that part to enter the market. So because of that, smart money might need to take out those people first. As you can see, this is the 4 hour time frame. So smart money was supposed to take out those people first. If you look very well, you see that. this resistance level for the 24 hours time frame. Then if you look, you see it exceeded the resistance level for 24 hours time frame, exceeded the 4 hours, and then it did not even touch the psychological level. So smart money will let you know that in this case, because many sellers will be entering this market here and entering market here, you wait until you have confirmed liquidity. So your liquidity is confirmed in this zone. So once liquidity is confirmed, all you need to do is you will watch the move. If you watch, you see that the sellers move the market from here. And all of a sudden, there was a retracement. That will be your entry. This is what we want to pay close attention to so that we can have more winning trade this week. If I take it from a lower time frame, let's look at 1 hour time frame. If I take it from a lower time frame, I take it from a lower time frame, then what I'm saying will be more visible. If you look now, you will see what I'm saying. Hello? Hello? If I take it from a lower time frame, then you can see more of what I'm saying. Hello? Yeah. Since when, babe? And you know, in this house, and you know the one that told me to cook plantain and these thing beans. Sorry about that. Received a call from my wife. So now, if you look at the market structure from the lower time frame, you will notice that the moment price go to this level, it got rejected just after the distance. So if you look, you see that I spotted the liquidity here. I spotted the liquidity here. So these were my liquidity zones. So these two liquidity zones will let you know that smart money will be moving this market here once these stop losses are taken out already. So the big movers of the market will be driving this market from this point after all the stop losses are taken already, which is where most of the brokers make their profits. So, but how do you analyze this kind of market? It's very simple. What you need to do is, after spotting this liquidity zone, what will confirm this liquidity zone is the market structure. So when you come to a lower time frame, you look at the market structure. First of all, this is an order block. So you're going to find if this order block will be broken. You observe that when price give, because there's always going to be a reversal. When price gave a reversal from this second liquidity, this is an inner liquidity, this is an outside liquidity. From this inner liquidity, there was a retracement. But when price eventually got back to this OB, he gave a rejection again. This should be your confirmed entry. And if that's that becomes your, should I say, your place of interest, your POI. So this should be your place of interest because of the rejection given again by this previous OB. So if it was broken, then we can say that the structure was broken. But because it wasn't broken and there was a rejection, confirming that this liquidity zone is still very much active and will be a great move and a great entry. So this is how to easily spot the entry. Now, if you notice, you will notice that the moment this order block gave us this entry, there was a return of price to the order block. Now, why was that? To confirm if that's a valid order block. Of course, I've taught in one of my videos that if that order block is mitigated, then it's not a valid order block. But instead, before it got to the order block, there was a gap that he gave, which we call our fair value gap, before price began to descend. That means if you entered this trade from these points, this liquidity points, let's say you didn't take it immediately, you waited for a reversal and it picked your trade, you will notice that even though there was a reversal here, it will not get to your initial entry. Rather, it will give you an opportunity to take another entry, which obviously broke through this psychological level, broke through this resistance level, and kept on breaking onto this level. Now, at this level, it gave a little bit of reversal, which someone can still even take more entries until this level. Imagine taking this trade from this point to this point. That will be a lot of profits. And that can triple accounts, can double accounts, and do a lot of things for you in the market. So this is why we are paying much attention to ICT and smart money concept, because it will help us to be able to spot longer entries so that we can make more money. The most important thing in this market is making a lot of money. So let's go back to the 24 hours time frame so that we can complete my discussion there. So I needed to give that review so that we can be able to use that to make a better decision for the new week. So in this 24 hours time frame, we also look at trend. We observe the trend. If you look, you see that we're still on a downtrend. And apart from being on a downtrend, there's still a downtrend in the downtrend. So there's an inner downtrend inside our downtrend, which is this. I marked it also as well. Then there's a counter trend, and line has consistently followed the downtrend. So we're obviously in a downtrend. Then we also mark at price action level from 24 hours time frame, which we now go to the 4-hour time frame. And then we turn on session breaks. I always tell you, use settings. You go to events, you mark, news is on red, indicating that we don't trade on that zones. So for the 4 hours time frame as well, we look at the trend. This is obviously a downtrend. We mark the counter trend to see if it will be broken. This was the first one we marked, it was broken. We marked another, it was broken. We marked another, it was broken, because we were anticipating if price was going to go by, since we are in our buy region. But that's why we kept on marking those trends. And they were constantly broken, indicating that we're not going bullish but bearish. For all of you that were in the market this week and you understood how the event went this week, you will notice that it was not really too good of a market, because there were a lot of, the market was full of events almost at every hour and at every time. And that really affected a lot of market decision. Market was extremely volatile. So, and that really did not help us to make good profit this week. So, but we hope to make more profit in the following week. So we also take the two candles that begins the week, which is this, as you can see, this one and this one. We take the high of the candle, which is this, we mark with a red line low. So, and then we say for this, any activity on this side will be buy region. So we're going to go on long buys and then short sells. But you'll be wondering, so what happened in this declination? That's because a lot of things happened during the week. So decisions were not made based on our, our strategy doesn't work very well when there is news and events. It was the news, the CPI, and other events that affected this declination. So, and then we also say that the sell region, we're going to be looking at for long sales. Of course, there was a long sell during the week. Our price began to balance from Thursday night to Friday. So it was a good time to make entry for us. Then I also told us that for us to be able to spot long moves, we'll be taking price action from 4 hours. So we took this not just price action, resistance and support level. We took this resistance level, and then we took this resistance level. So these resistance levels were the levels that the support and resistance levels that we used in making certain decisions. Because obviously it just tells us that these levels are in a higher time frame since we are trading from the 15 minutes time frame. So you will notice that constantly price respected this support level. So if you look, you see it was a support tested here. Price went up, tested this resistance level, came back, broke the distance because of smart money, tested the one below. So how do you know that it was going to test the one below? Pay attention to the candle that broke. If it's a bearish candle, then you have to give it an opportunity to break to get to this level. Then when it got here, it's a huge reversal, telling you that these levels are key levels. You know, then we have that we use blue for the one from 4 hours time frame. We use purple for the ones from 1 hour time frame. So if you see, we labeled it. This is 1 hour. This is 4 hour. So the one that came from the 1 hour time frame served this decision here. It came back, tested this twice, tested this thrice, and this alone is liquidity. This is showing you liquidity. This is pure liquidity. Because it was tested here before and tested here again. This is pure liquidity. So this is a good entry. So if you take this entry using smart money concepts, you're going to get this move from here to this point. If you do the same thing here, you're going to get this entry from here to this point. So pay attention to all these things I'm telling you so that we can make a lot of money in this new week. So of course, these are our market decision, trend patterns, psychological level, price action, news. Okay. Then we drew our psychological level, but that from 15 minutes time frame. So after taking these price action levels, these are serious resistance and support levels. Very key levels for us. We went to 1 hour time frame because those two levels are key for us because we make our entries for 15 minutes. So we want to see where supports, the major supports and the resistance level are in the higher time frame. So blue for 4 hours, then purple for 1 hour. That's how we did it. So if you look at the 1 hour, of course, we still looked at the trend, still on a downtrend. We still marked out the counter trend. Then if you look at when market started, you'll notice that it came here, tested this level as a resistance, tested it as a support. That becomes a very key level for smart money. So even though a bearish move broke here, to take out all of these stop losses that were here for smart money, it's reversed from this 1 hour time frame. So for smart money, knowing that this 1 hour time frame has been tested here, this automatically gives you liquidity zone. So we might be saying support level tested several times, and still yet that support level is giving you another block. So if you don't hear me say other block, you don't hear me say block that was not mitigated, or fair value gap, or break of structure, just know that I'm paying more attention to the support and the resistance level. So, but all of them still fall in the same category. So this is a good place for my smart money. You can see the entry. It never came back to test here. So from 1 hour time frame, this is a fair value gap. Fair value gap. And then there was other block here, other block here, other block here that were never broken. They were never broken. and there were fair value gap here, fair value gap here. So gave a constant uptrend until it got to the 24 hours resistance point where the liquidity was formed and markets changed direction. So pay attention to all these things I'm saying. It will help you a lot to make a lot of money in the new week. So, of course, after the 1 hour time frame, we go to the 15 minutes time frame to take entries. So, and we said we're not going to be doing price action lines again on 15 minutes time frame so that we can spot those gaps between the 1 hour time frame and the 4 hour time frame. But that doesn't mean that there are no price actions. That doesn't mean that there are no order blocks. In fact, our order blocks, our fair value gap were mostly drawn from this 15 minutes time frame. If you look at our first entry, I want to tell you why we took that entry. Of course, we made a lot of profit on Monday. Why did we make that profit? If you notice, you will observe that this 1 hour time frame support level was tested here. And for smart money, there was a reversal. It took out all the stop losses here and gave a rejection just after, because this red line, which is the line that gives us the region for sell of the week, is actually a support line. So after that support line, it gave a rejection. So that's a confirmation entry for a smart money move. And our next take profit should be at the next resistance level. Now, when you look, you see that that resistance level was tested previously, which it was after it was broken here. After it was broken here, it gave us what we call BOS. So there's a break of structure here, even though it's not identified as break of structure, but it's seen as a resistance level. So but that's a confirmed entry for smart money once you see that there is a rejection. So this rejection here confirms that this is an entry. And this entry will give you smart money move, which broke this support level and went to test another support level and on the 1 hour time frame. So you can see how the higher time frames support and resistance level can help us identify long move. But I only took this entry. Why? Because I trade psychological levels. So I just confirmed, I waited to confirm a bullish move on this psychological level. So I took from this psychological level and took my take profits just at the next resistance level. So if you notice, it did not get to the 1 hour time frame because the 15 minutes time frame already has its own resistance level. So I took from the 15 minutes resistance level. Someone who's waiting for the 1 hour will actually have issue with that too because the market reversed and came to hit the stop loss. But we're already in profit there. So seeing this bearish move break this psychological level, being that I trade psychological levels, I needed another bearish move to break the red line, which is another support level, before I confirmed another entry. And the next price action level for 1 hour time frame was now my take profit, as you can see. So these two entry gave me huge profits in the week. Even though I targeted more, if you notice, because I knew there's supposed to be a long move in the market. So I was targeting this long move. But at the same time, I had my BE, which is break even, and take profits here so that I do not lose my profits. So what happened? That was where smart money came in. So if I was paying attention to smart money, that would have been a beautiful entry for a smart money into this long move. How do I get that? Let me show you. This higher low was never broken. This higher low was never broken, right? Then when it got broken here, that became a confirmation of break of structure, right? Okay. And then this one was broken, another confirmation of break of structure. Okay. So when there was a break of structure here, usually every break of structure gives a retest. And for ICT, in this particular zone, if you look at a lower time frame, how to use lower time frame to spot ICT entrance, you will notice that let me go back to that spot. If you look at that side on a lower time frame, that's 5 minutes, you will notice that that particular zone had new structures in a lower time frame. And this is it. These are the new structures that were formed. So when these new structures were formed, you were not supposed to enter the market immediately. You're supposed to pay attention to the lower time frame structures to see what was going on. I did that. That's why you see this fair value gap and this fair value gap. So I paid attention to all the other blocks and watch what was going on. The moment I observed this reversal from this point to this point, right? All I need to do is I need to pay attention to my zone for entry. So if you look at the begin, wait, let me use the Fibonacci to properly. Yeah, to use the Fibonacci to get the zone which you're supposed to enter properly, so you don't enter from the wrong zone. So I want to point that out for us before the time goes off, because our time is almost up. So from this zone, you have to draw the Fibonacci to upward to this zone. So after drawing that, we are to pay attention to when it has crossed the half side of the zone. So from here, anything from this side is our entry. So if you notice, this support level was the constant tested region. So that becomes an entry for that particular ICT move. So that was why that entry was a confirmed entry. And it was going to be a big move, because such moves will move from that confirmation zone to where you marked it, which is the next liquidity. So that's going to be a long move. You can see it. So it's a very long move. So these are the strategies we'll add to all our previous strategies in the new week so that we can make a lot of money in this new week. I hope you're ready. So that's how I make those two entries, and that's how I made many other entries, even though some entries didn't go as expected. But my time is up already, and I would want you, I still have 3 minutes. I want you to not miss the analysis for Monday morning, so that we can be able to do it together, 6 a.m. on Monday morning, and then we can be able to make certain decisions in the markets. We want to really make a lot of money. Okay, now look at, you will see that this entry was good profit, this entry was good profit, but this one, which is on Tuesday, I noticed market began to do somehow. So I started using the smart money concept and the ICT. So here I would identify this other block. Then I identify this fair value gap. So when price got to this support level, I waited for a bullish move, and I took that entry, which my take profit was on the next resistance level. So this support and this resistance gave me that entry. But this second one, after the bearish candle broke this support level, I expected to see a long bearish move, but it did not happen because of the events going on during the week, and I was not too expectant of that. So that was why I this move did not go very far. It stopped here. It stopped here. So this was supposed to be a break of structure because I already identified it as a break of structure. But no, it was a continued BOS. Sorry, it was a continued OB. That's other block. So there was another order block here that gave this move because of the reversal. So that's why everybody must be very careful when you're trading. I, for a person, what helped me was I was seeing these in these 15 minutes, I was seeing these resistance that happened here, and it was a very important level for me. That was what caused this reversal, even though I was targeting far. So from there, as I just noticed the rejection, I had to close that trade to avoid loss. And that's how market moved almost all through the week. So if you see, you'll notice that that strategy I used here was not a good one because it was not close to a psychological level. It was not close to my levels. And I took that decision. It's not a good one. But if I had used the ICT and the smart money concept, especially the ICT, I would have been able to spot these long moves. So what we'll do during the week, that's why I say don't miss the analysis sessions, is we're going to use ICT to look at the market structure. We'll use SMC to look at the other blocks. Then we will now use the psychological level and price action levels to spot entries. So when we are looking with the psychological levels and the price action levels, we're looking for